Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, January 19th. Okay, it's 7:30 as I'm starting the video, a little later than normal. So let's dive right into it. Okay, futures are up nicely this morning, up on ES about 26, 27 handles. So and they're up across, everything is green today. Oil, gold, silver, NASDAQ, IWM, so everything's green today. Buy everything rally, set for a gap up. Now, the thing to watch this morning across the board on these gap open higher, okay, they often prove irresistible to these faders. Okay, we've seen it 100 times before. So that's something to watch this morning on the open. Can they, once they gap it higher, can they hold it, form a base and build from there? Or does it roll over, then back down to fill the gap? Now, that can be a very nice trading op if you're comfortable, doing that, and you're nimble, and that's what you do for a living. If you're more of a swing trader, just let the day kind of play out and see if, like here on SPY, we're set to open above this prior gap up here around 378.50 in that area. At least that's where I saw it just a couple minutes ago. So here we had price drop out of this balance area, and now this morning we've popped right back into it. So was this just a one-day wonder, and price can jump back up and then into this balance area and possibly break out? It's not going to break out today, I wouldn't imagine, but later on this week, this 381 level has been resistance, and then, build a base back here above this prior gap and resist that temptation to roll over and backfill the gap higher from this morning. So, depending on your trading style, be at least ready for a gap fill lower. That's a great trading op if you can catch it right and the market gives that to you. And then watch price carefully as it fills the morning gap, and I would anticipate that you will get a bounce there if that happens. If it's just a technical move to, fill the lower gap, after it fills, you're probably going to get a bounce. So that's just the in and out technical trade. Breaks the opening low, heads down, goes down $2, fills the gap, and then bounces. So that might be an interesting setup for you across the board. So let's look at the 30-minute on SPY. We came down on Friday to hit this 374. There was a gap here that filled, bounced back up, and now we're set to open up here. I think as long as it holds 378, which was the bottom of this consolidation range, you're fine. But a break back below, I think you're going to come back and fill this gap. And for your information, if you missed yesterday's video, I went through all the daily charts of the indexes and FANG names. So if you want to zoom out and see where we're at on the daily chart, look on YouTube for yesterday's look at markets, and you'll get all the daily information. Here's the QQQ 2-hour. Finishing on the lows pretty much on Friday. I think this sets up as 312 being your pivot point. We're set to open up in the 314 area with that gap below. And so watch that. I think if it can hold 314 and build a base there, there'll be a chance to, drive up to this 317 gap where we've had 2 instances of rejections at that level. So 314 will be your opening pivot for a longer duration trade. I think 312 is the level to watch. Below that, I think favors coming down and filling this gap. We'll have to see how it goes. 30-minute chart, just more detail on the same. Set to open up here, 314, and with an opportunity to drive higher. But if it rolls over, then we've got a level here around 312, and then a large gap down at 310.25. IWM set to open above 214, so gap completely over this other gap, and then there'll be a gap below. I think you got to stay bullish above 210 and this channel line. If it breaks below, then I think you can take a tactical short from 210 down to 204. Not a ton of support down in this area. I think you'll get a move, down towards the 206, 205 area. Here I've got the little intermediate levels here for you to use as reference. Right here at 209.50 on the 30-minute time frame, with a level here at 208, and then 205, and then 204, and then a big void down here. But as long as this area holds here above 209.50, above 210, just stay bullish. No reason to get too cute, in this area. The only exception to that would be our opening trade. If we opened up here around 214 and they decided to fade it, you could get a quick $2.50, $3 here, coming back down to Friday's close. Facebook. I think there's a lot of interesting setups here in the FANG names. As we discussed yesterday, a lot of these are right on the edge of either rolling over or going down to the bottom of their trading range. And we talked about yesterday, Facebook on the daily chart is right down here where the 200 on the daily is. And I think 255 here is a nice pivot location for you to trade around. And, it'll open higher, but if it drops back down below 255, I think there's a good chance to come down and back test this prior low and back test the top of this gap again with the $10 gap below. If it can hold above this downtrend line and clear 260, then you got our chance to come up here to 263.50 and fill this $4 gap up to 267.50, which would, put it back on the right track of visiting the bottom of its trading range and then coming back up to the middle. So I think Facebook is in a kind of a precarious place. Earnings are on the 27th. It's flirting with the 200. I thought all along that the 200 would hold until at least earnings. And it has so far. It took a look below, but recovered it on Friday. So we'll see, how things go between now and earnings on the 27th. Apple. If you look at the daily chart, it gives a real nice look that on Friday there was an intermediate trend line on the daily chart that was violated and price was below. So now you're going to have a gap open higher, and the last time I looked before I started the video, it was right around 129. I think 128.50 is the key. That's your pivot on the 60-minute time frame. I think as long as price holds above, you're fine for bulls. But if price loses 128.50, it's going to fill that opening gap and possibly come down here to 126.25, and below that is 123.50. So all of these FANG names have been really weak, not trading particularly well. So I think the kind of the default position is leaning more to fading pops and looking for places for it to fail into resistance versus thinking they're going to be in bull mode like they were over here. So key off of 128.50 this morning. Above, you can stay long and look for this gap fill. Below, there'll be a gap to fill. And then these support areas at 126.25 and 123.50. Tesla looks the best of all the mega cap tech names, working here inside this consolidation range between 805 and 880. I think if you see any weakness down here into 805, I think you can buy that and look for a move back higher in the consolidation range with a stop just below. I did not check the prices before the video, but I assume there's going to be a gap open higher to reclaim this trend line, and you've got a $25 gap right here between 854 and 880 that has yet to be filled. That would be a nice one to capture. And then, of course, if there's a breakout above 880, then it's off to its next leg higher. Microsoft, more weakness. Price is set to open above 214 here this morning. You can see on Friday it finished near the lows. Use 214 as your pivot. Anything below, I think you can be short for a gap fill and then a move down to 212. Anything below 212, I think you find 209 pretty darn fast. I certainly want to be in on that trade. But above 214, the technical target would be 217 at the top of the box. And that ain't all bad either. That's $3. So, but I think it's pretty clear. 214 is your pivot. Amazon. If you look at the daily chart, 3,100 is the midpoint of the large consolidation range that Amazon has been in the last 4, 5, 6 months. So this 3,100 level is rather important. A break below puts price on the lower half of the consolidation range. And just from a technical standpoint, once you cross that midpoint, the technical target becomes the bottom of the box, which is down towards 29.50. So 3,100 is definitely the pivot. Above that, you can look for moves higher. There's a little resistance level at 3,130. There's another level at 3,150. And then above that is 3,200. But it's got to hold 3,100 going forward. Otherwise, I see it going down at least $100 to the bottom of the box. So that's a very clear level. I would even make that bolder on my chart just to remind you that it is the midpoint of the consolidation range and therefore holds extra significance. Google, 1730 at Friday's close. Looks like the pivot to me. Above targets 1755. Below targets 1715, then 1700, with a $50 gap below 1700, which is one you're certainly going to want to capture. So I haven't been actively trading Google. It's just been too kind of choppy. I was trading it back here and thought this was going to be a real breakout. Turned out to be a head fake. I have not been trading it recently. What I've done is just I've alarmed this 1700 level and alarmed 1755 as more or less a place to possibly get long here at the midpoint for a break above, back up to 1800, and on a break below get short for a $50 move into the gap. So I'm going to let all this chop happen without me, and I'm trying to pick areas on the outside of those ranges to get hopefully an easier, more directional, unidirectional trade instead of all this chop on a either a breakout or a breakdown. Netflix got earnings after the bell. It'll be interesting to watch this to see, do they run it? Do they run it higher into the bell? Do they fade this gap higher? I did not look at the where it was trading pre-market, but I assume it's, in this, between 505 and 500 area. 500 is definitely your pivot this morning. If it can hold that and drive higher, you may get a run into the close, into the print, or it may roll back over, fill that gap, and be weak into the print, or just tread water. I mean, I've covered all the bases. I guess I'm going to be right. It's either going to go up, down, or sideways. So there really isn't any other option. I don't spend a lot of time trying to guess which way it goes, other than, when you have earnings after the bell, there's a chance for more of a unidirectional move if, optimism grabs the market that they're going to have a blowout. You may see a run into the print. So that may be one to put on your radar here this morning. And I want to leave you with one stock chart, an individual name. That's JMIA. This is the, I guess they call it the Amazon of Africa. E-commerce in Africa has made a complete round trip from its IPO high here at 49, came all the way back to $2, and has made a round trip all the way back up there. We should have been playing this the whole time. We got some good action in here, but did not pick up the ball, on this pullback, which is regrettable. But now we can refocus. A breakout here above 49 would be huge to take out that IPO high and have everybody that's ever bought be profitable. And then if it can break above, all this becomes support for a move higher. So important critical spot for JMIA. You can pull up the daily chart as well to see if you want to take something between now in a potential breakout. But I think the weekly chart here holds the key because it has that all-time high marked, and we've already tagged that level about a month ago and did a reach up here just recently to touch that level, and it has been repelled thus far. So price is at a critical spot, and I want to put it on the radar. You can set yourself an alarm there if you don't want to have it in focus every little minute. Set yourself an alarm where you want to bring yourself back into the stock, refocus on it, and possibly take a position based on this breaking out in the days or weeks ahead. All right, that's all I have for you this morning. We recovered a lot of the items that we touched on yesterday. I think there's the possibility of some really good trading ops here this morning with the gap open, either to build on those gains by holding the open, or if it rolls over, taking advantage of a quick technical move lower to fill the gap, and then covering that short and anticipating a bounce there later on in the morning hours. And by all means, watch the FANG names very closely. A lot of them are at critical spots where I think there's some very good trading ops to be had. And then tonight, Netflix after the bell with earnings can and often has been in the past a mark for sentiment in mega cap tech. So we'll see how that goes. I hope you like the content. If you're new here, hit the subscribe button and the alarm bell. You'll get my content. You'll get notified of my content every time I publish, which is at least once a day, oftentimes more. Over in the show notes, there are convenient links to the blog site where you'll find interesting articles, helpful articles for aspiring traders at all levels, as well as a place to register for my content where you'll get an email each and every time I publish. Plus, you'll get an invite link to our trading room where you'll benefit from the camaraderie, friendship, and good trade ideas from all the guys and gals in the room that are working hard to improve their process and tackle this market each and every day. So, we'd be glad to have you there. So this has been Chris Buss with Traders Profit Compass. Talk to you next time. Have a good start to your trading week. Talk to you soon.